Welcome to Swiss Quote's Themes Trading with Peter Rosenstreich, Head of Market Strategy. Peter, remarkably low volatility at the moment. What's going on?
It's surprising considering how many events there are in the very near future. I think what we're seeing right now is because of the change of sort of central bank policy, the ECB, the Fed, that we're starting to see sort of good conditions for equity markets. So we're seeing decent growth, low interest rates, low volatility, sort of stable policy. All of those things are generally when equity markets continue to improve. And that's why we're seeing sort of indicators for equity volatility as well as FX volatility really go into 12-month lows.
Yet there are a few upcoming events, as you rightly said, that might actually cause a bit more bumps along the way. Let's talk about a couple of them. US Federal Reserve.
Yeah, the Fed is probably one of those big ones because only about 6 months ago, we had 2 to 3 25 basis point hikes penciled in for 2019, and now we don't have any. In fact, we have sort of expectations for balance sheet reduction almost off the table as well. So they've gone from hawkish to neutral dovish in a very short period of time. So while you have very good growth in the U.S., expectations for inflation are not particularly high, and the Fed is willing to accept a certain level of inflation above the 2%, but expectations for tighter policy is really sort of off the table. So it's really an exchange about face we saw from the U.S. Fed.
And where's all this coming from, really? I mean, we had trade tensions, really rife towards the end of last year, a hot topic there, and of course the Chinese economy. Oh
yeah, agreed. Two of the primary factors. So first is the weakness in the Chinese economy. Recently, we heard from policymakers that they shifted their expectation for growth to 6 to 6.5% annual number, and that's a significant markdown from where it was 12 months ago because it's a realization of a slowdown domestically. But policymakers are taking the right steps. They're cutting taxes. They're increasing the credit, they're lowering sort of interest rate reserves. So they're moving in the right direction. At the same time, sort of the U.S. and China, it clearly shows that they're moving closer together. The news flow is very specific, whether it's purchases of agriculture and automotives and respect for intellectual property from China, as well as the dropping of all new sanctions from the U.S. So it seems as if China and U.S. are closer to a deal. And we're seeing that reflected in the Chinese yuan as it continues to get stronger.
And of course, the biggest elephant in the room right now, Brexit. Still really no certainty where that's going to go.
Brexit is truly coming in hot at this point, where the March 29th deadline is just a few weeks away, and it doesn't seem like the EU, UK negotiators are anywhere closer. The main issues continue to be sticking points. There doesn't seem to be a mood to compromise. The uncertainty level, I think, is really ramped up, but it's really not trickling through to UK asset prices or even the sterling for that matter.
Still, people are concerned. For investors wanting a bit more of a safer play, what are you recommending?
Well, this is very interesting. I mean, to me, the uncertainty level of Brexit is just off the charts. When we're starting here, probability pricing, 50% of a extension, 25% of a soft, 25% of a no deal, to me is completely crazy given the speed of the news cycle. So for investors looking for something to put their money in, moving away from what we refer to as a cyclical investment to a structural investment is probably the right move. And structurally, it means it has a longer term. It's part of a bigger trend. So there will be short-term volatility, whether it's Brexit, whether it's trade negotiations, but the longer-term trend is sort of will not be as affected.
So what you're really saying is a trend that you're banking on as being a success into the future?
Correct. It's a primary structural driver with its social and economic consequences. So we really look for those type of events or those type of issues when we have this sort of short-term volatility. And digital payments, this idea of a cashless society, is one that continues to pop up, and it shows some very impressive numbers that it is the correct trend.
Show me some of the companies in there, Peter, because we all know that cash is actually inconvenient. It's much more convenient to pay with the contactless payment.
Agreed, and globally there's enormous number of national stories transitioning from regular paper currency transactions to a completely mobile, cashless, economy in years. You take Sweden, you take Hong Kong, you take South Africa. These are places that are adjusting very, very aggressively to this idea of a mobile, cashless society.
And of course, it's not just about the contactless payment, but it's also about the data and tracking what you're spending.
Yes, you can play this trend, this thematic trend, in a variety of different ways. We look at sort of the larger infrastructure type of plays. We think these are the most mature, they're the most investable, and they're the surest marks when it comes to investing in this type of thematic event. There are an enormous number of smaller fintech firms which have very, very bright futures and are very exciting. But for this particular thematic certificate, we looked at the sort of the larger plays. So something like WorldPay is really an integrated processing payment solution where people could come and get their complete, or sort of large businesses can come and drop in a complete mobile app payment application in a single swoop. So we think it's a great single name within the thematic.
Actually, I wanted to delve in a bit deeper into the theme itself and really be a bit playful with it. How far can you take this idea of banking digitally, be it educating your children even? Take a listen to this Swiss entrepreneur.
I think for kids, it's really important that if they start to pay not with real money, but also with cards, that they have this overview, because if you pay by card, it's really easy to forget how much did I already spend, for what did I spend this money. And we see the trend going from cash to cards, or either like you can pay by watch today. So it's easier and easier to pay. It's really frictionless to pay. So we think it's really important to have an overview for what you spend your money. When we grew up, we got 20 francs from our parents, and if I would spend 5 francs, I had 15 francs in my hand. So and that changed today. If I got money on my bank, it's just a number on a database, and that's much harder to get as a kid or also as a young person what that means. In our case, with an app, so with our app, you just log into the app, and then you see this, for example, this chart where you see what did I already spend, or you can even create a budget that you get a notification. So you say, I want to spend, let's take the example from before, I want to spend only this amount for restaurants. So as soon as you spend more, you get a notification. So you get notified by your app that you already outspend your budget.
So Peter, how much cash do you have on you right now?
Not much. I'm a big fan of paperless and cashless economies. I do very poorly with cash. I can't keep a track of it. And when I have cash in my pocket, it disappears. I don't think I actually spent it on anything, but somehow it just disappears. So going to a cashless is, I think, very good for my sort of lifestyle.
It'd be great if the parking meters were cashless. That
It's
really
only a matter of
time. Thanks very much, Peter. Well, you heard it. Digital payments is the structural theme that you should be playing. Happy investing.